fabulous. After hitting 60, the volumes there were tremendous. Then it took time, then broke out above the consolidation, and the trend line breakout as well. Now 88 was the previous swing top, and that, to break that it took time, and now it has just broken out above the same. I believe the stock is now headed towards the 120, 130 odd levels in the near term. But from a trading perspective, I think it's a good BTST at this point of time. Buying this stock at current levels around the 91, 90 odd levels with a stop loss of 88. I believe this stock can go towards the 97, 98 levels in tomorrow's trading session. That is one. The second one is Adani Enterprise. Look at this stock, higher top, higher bottom formation, tremendous, pattern. Looking at the overall open interest as well, it has really increased significantly. I believe this stock is going to go up towards the 260 odd levels. So buying this stock at current levels makes sense. Keep a stop loss of 237, and the second and the target should be around the 258, 260 odd levels.
All right, that's the view coming in by way of some recommendations. Meantime, Deepak, let's get in a take from you as to how you've looked at trend, the quarterly performance, and just the trend that you're seeing for the future of retail as well. We're expecting a lot of disruption and, a lot of breakthrough here.
I haven't seen trends numbers when we were looking quite closely at DMart, although it's very expensive. Look, I mean, everything about the numbers there look good. They've just had a QIP. I think they're going to go and buy more stores as well. I just feel, everything in the retail space is extremely expensive. So is Trent. And although it's a good momentum play here, both DMart and Trent are, a fundamental view would probably be to pick the right times to buy this stock. But buy it over time. So instead of piling on at one point, and both of these stocks are very good. They're actually the surviving retailers, which makes them attractive because in the case of a disruption when all your competitions died, you want to buy the guys who survive. So the future group is a lot more confusing. So I'm not really able to make sense of a lot of who owns what kind of in that spectrum. But Trent is fairly clean, and so is DMart. So I think that way I'd focus on buying these stocks at times when there is some kind of a correction in the market, so you can get them at better prices. But they're terribly overpriced right now, so just big warning. I don't know if I can justify valuations at this point.
All right, fair enough. That's the verdict coming in on the retail space. Meantime, Nirav, let's get in a take as to how you're looking at DMart and Trent on the charts.
Yeah. See, looking at DMart, a fabulous pattern, but it's moved up so significantly from 1700 odd levels to about 2500 now. Buying fresh at this level is not advisable. At this point of time, if someone's really bought at lower levels, then I believe at least 25 to 50% one should be booking profits, and then waiting for levels of about 2200 to come again to make an entry for DMart. Looking at Trent, I believe the pattern is very similar in Trent, but the only thing in Trent really is the volumes. You look at the volumes around the 600, 700 odd levels, the volumes are very high. That is telling me, someone is selling here. So it's a clear signal for me to book profits in Trent at this point of time, and I'll be, booking profits 100% at this point of time. I believe it can come down towards the 600, 550 odd levels, before which I'd like to buy this stock. So definitely I'm not buying Trent. For DMart, I can still hold 50%, but at this point, Trent should be booked in full.
Okay, let's get a sense of what dealers are also making of the trend this afternoon, Jayesh.
But there's been a sense of profit booking last couple of days, and the same thing continues today as well. The market has been rather weak since early morning as well. and the advanced decline has been on the weaker side, almost 1:2 advanced to decline stocks that we've seen on the NSE. What is not too enthusing is the way broader markets have behaved today. Both the small and the mid-cap indices have cracked over 1% and have underperformed the larger Nifty as well as Nifty Bank as well. Individual stocks that are in focus in dealing room chatter. Kotak Bank that has been attempting to break out above its 50-day moving average. UPL on the back of positive results as well as some technical factors. There is a price volume breakout that dealers are witnessing. On the downside though, Motherson Sumi that has been testing support at the 50-day moving average, and Just Dial that seems to have broken down below the double bottom that it had previously formed, and there could be further downside pressure for Just Dial.
Okay, that's the word coming in on how the last lap of today's trade is panning out. Metals clearly under pressure. And Deepak, do you think, all the ongoings with China, you don't really know of how worse the intensity of the coronavirus is going to be. You've already had the death toll count reach higher than what we saw at the times of the SARS outbreak. And then you've got, numbers from Tata Steel, clearly disappointed and were way off the mark from what the street expected. Europe clearly weighing heavy on the earnings. You think that's sort of, pushed back steel re-emerging as an investment destination?
Well, I think India is barely a participant in the world export market for steel. It's not because of anything else. It's just that our steel making processes are very, very expensive compared to Japan, Korea, China, of course, and even for that matter, Russia. I think they play a much bigger role in export pricing. So unless there's some kind of a miracle in terms of pricing, that prices shoot up everywhere, I don't think so. Because if this coronavirus issue gets worse, it's not only going to be not limited to China, it will spread everywhere else. But it will also cause supply chain disruptions all over the place, and steel demand will fall quite substantially. So I think the idea here will not be to look at a scenario where the coronavirus actually causes or expands to a larger dimension than it is right now. But to see world recovery come back, and then I think there will be some demand that might come in for Tata Steel specifically. Hopefully that that local demand kind of